Alrighty, welcome traders. It is Wednesday, January 10th, 2024. Let's get into our trades for today. I'm going to spend some time today going through a little bit of my trade plan with you and how I determine what trades to put on in the day, as well as share one of the trades strategies that we used today in the account. We do use multiple strategies. We've got the bear trap trades, we've got strangle trades, we've got long-term bear trap trades, we've got naked puts, we've got credit spreads, we've got ratio spreads. So let me get into some of those today. We've also got the BA, the big ass 112 bear trap trades, and we've got the FB, the fat bastard versions as well, which are hedges. And then we've also got hedges in the account. So we've got a lot of different trades going on, but it's all according to plan. I want to walk through today what my process is with you so you understand why I'm putting on certain trades. So before we get into that, let's jump into the markets briefly and let's share screen with you guys. I'll take myself off video so we have the full screen here, because people don't like the fact that my head covers up a piece here, so you don't need to see me anyway. All right, so let's get into the markets. Markets were up 27 points today on SPX. So yet another update. If we're looking at SPY, we were up 0.57%, continuing to march up. And today, importantly, we had a PSAR bullish reversal signal. So despite the 6-day PSAR bearish signals, we managed to break back above that, and now we are fractionally away from a new all-time high in the S&P 500. So let's take a look real quick here. MACD rising, RSI rising on the daily, falling a bit here and a little bit overdone on the weekly. But right now, I mean, all eyes are going to be on, can the market break through to new highs? So we got new all-time highs are within striking distance. We are 10 points on the SPX away from new all-time highs. So we'll keep an eye on that. Taking a look at the Qs today. Qs continue to just roll on. These have been just pounding upwards for 4 straight sessions. MACD rising as we bounced off of these previous fib and support levels here. I'll draw this one out just a tad for you guys. I'm going to keep today really moving quick. So let's do quick so we can get through a lot of trades. Why did that not extend? I'm not really sure. Oh, I don't even know what I'm clicking on here. Okay, we just didn't bring it along. All right, so bouncing off of the support level, moving higher. Again, a PSAR bullish reversal signal. MACD moving higher, RSI moving higher, bouncing, breaking through the 50 and moving higher. Same type of thing in the weekly. It's not as strong, but we could be seeing new all-time highs here in the NASDAQ anytime soon. If we take a look at the IWM, that's also trying to hang in there as it just holds this 21 EMA and just pounds itself sideways. No real direction yet, so we'll keep an eye on it. But we do have this range that we broke out of, came back through. Will this previous resistance range that we broke, will that become, it didn't become support, we didn't bounce off, so will it become resistance again? And this is just another higher low, higher high scenario here. IWM, just sideways action, no real conviction yet either way. I think if the NASDAQ is off to the races, pulling SPY along with it, the small caps are going to struggle. All right, let's keep moving through quickly. Number of stocks above their 50-day moving average on the S&P fell on the session. So despite the market moving up, we're still seeing some of the stocks falling below their 50-day moving average. So it's not the whole market moving its way higher. And we're going to see that when we jump into sectors today. There's quite a few sectors that are negative. So it's, despite going up 27 points today, most of that gain we're going to see was in the big name stocks, and we had some big movers today in the Magnificent Seven. All right, put call ratio climbing up a bit today. We'll keep an eye on that. If it starts to climb, that's going to be another bullish signal. So if we start to, if we start to climb, it's going to be a bearish signal. It's climbing a bit here. We'll see. It's fighting along these lines. I don't know if we're going to move higher or not. VIX down to 1269. It's dead. The dollar on the session today did drop a bit. So we dropped fractionally on the US dollar as we're just bouncing around the 21 EMA. MACD, RSI are rolling over a bit on the daily. And then on the weekly, they're trying to just move sideways a bit. Looking at the 10-year Treasury note today, did have a bit of an ups day on the session. MACD, RSI are moving higher. So we are, again, seeing some rebound in bonds, which is going to be in the bond yields, which is going to be negative for bonds. I really like bonds here as a potential trade. Looking at some of the futures, with the dollar dropping a bit on the session, we saw some increases in the Aussie dollar, in the British pound, in the Canadian dollar, and really big jump today. So a really good, strong day in the euro, breaking back above the 21. We're just bouncing along this 21-day moving average, really right in the middle, perfect for strangle setups, I think, on the euro. Taking a look at oil on the session today. So where were we on oil? Oil dropping a bit on the session. Let's dive into this triangle that we've been watching here. And we'll just extend it out a little bit more. So we are just in a tighter triangle. This thing's going to pop one way or the other. You've got the ATR bands. I don't have the Bollinger Bands live on here. I think we could probably turn those on here. So if we went and turned on the Bollinger Bands just to see what they're doing here, you got Bollinger Bands getting pretty doggone tight. So this thing's getting ready to move one way or another. And right now, RSI and MACD are saying lower on the daily, but they're saying higher on the weekly. So really a confluence of two different paths. Are we going to go break higher according to the weekly? And we're getting close to that PSAR reversal signal. My guess is in a couple more weeks, we might see that bounce. I don't know that oil's going to wait for that. Everybody still telling me all this news that the oil's going down and it's terrible news. I'm still pretty bullish on oil. I do like it here. Oil has been in this uptrend since the beginning of December, so I'm still bullish. I haven't been proven wrong yet on it. I'm not saying it's going to a 90 to 100 tomorrow. I just don't think it's going necessarily to 60. It could be wrong. Either way, I'm playing it with strangles and 1-1-2 trades, so I'm okay either way. Don't really care. All right, gold here, pulling back on the week, tried to dropped a bit on the session today. So gold dropping a bit on today's session. And then now in after hours, it's up a bit here as it just struggles with this 21 EMA. It can't seem to break above it. Bollinger Bands tightening, ATR bands tightening, MACD and RSI are falling, and the weekly is also falling. So it's really a bearish tone on gold right now as the markets continue to plow higher. Taking a quick look at copper, kind of a similar story. It's been in a bearish mode, but maybe a little bit of a reversal here as we're bouncing off the lower Bollinger Band. And maybe we'll get a little bit of a bounce here. Maybe it's just getting a bit extended until we get to the 3 ATRs here, these white bands. I don't consider anything overextended at this point in time. Even SPY, when you're looking at it, when we looked at SPY here, we are still well off. We're getting close to the upper Bollinger Band, which is tightening, but we are not near the 3 ATR, which is in this 45-degree angle. As long as this thing remains in a 45-degree angle higher, I don't think we're in danger of getting overbought yet. So there's, to me, more upside, and we could ride it higher here. So I am not, as much as I would like to see a pullback, right now it does not look exactly imminent like it's going to happen today or tomorrow. But you're starting to get closer to an overbought scenario. We've been watching January 17th, VIX expiration. We got OPEX following that. That can be a pretty volatile time. We'll see if those things give us some problems. If not, it's all good. We'll play what we have in front of us. So I don't want to get in the prediction game, but I'm in the protection game. So I'm protecting myself against any significant downturn while taking advantage of the upward moves here. All right, quick look at bonds. We talked about yields moving higher, which means bonds potentially moving a little bit lower, and bonds did move lower on the session. However, maybe a bit of a turn in after hours here. MACD, though, has been heading lower. We did break the uptrend. Bollinger Bands are starting to tighten up. So this thing's getting squeezy looking. We'll see what happens here. And, does this overall downtrend provide support and we bounce off it? We'll get rid of that. If it does, the weekly looks like it's rolling over a bit, and the daily has been. So bonds have definitely been selling off, and we've been trying to play those the best that we can. And then nat gas just on a move, and nat gas really on a move here this week, last week. So for 2 weeks, nat gas has rocketed from 2.5 to 3.1. So that's a big ass move. So sorry about my language here, but when you're looking at 3.2, which is where we're close to yesterday, the times, maybe let's just call it 3.1, from the lows of 2.5 just a week ago. So just a week ago, last week, we were at 2.5. Okay, that is a 0.6 move on 2.5. That is a 24% move higher. So when this thing gets moving, it can move. So nat gas currently on fire, no pun intended. We'll keep an eye on that. And then looking at silver, trying to rebound a bit here, and live cattle in a pretty nice tight range. Exactly what we're looking to see when we do play some strangles on this thing. So this ascending wedge here, what happens? We're just monkeying around with the 21 EMA and really not a big move either way. Weekly says we could be going higher. The daily says we might be running out of gas. Perfect for strangles. I like where we are on that. Talking about the major sectors today, half and half. So half the sector's green, half the sectors were red. The leading sector percentage-wise was communications, and then tech, and then consumer discretionary. Those were your 3 big sectors. So those are all of your Magnificent 7 stocks are pretty much factored into those 3 sectors. Your bottom sectors, oil, biotech, energy, semis, and pharma, which have all been on a pretty good run as of late. This is why there's not a lot of breadth to this market, and that's why you're starting to see stocks potentially dropping below their 50-day moving averages, some of them out there, because you don't have a all green sector list here. You are split right down the middle. Half the sector's green, half red. Pretty nice to see. And then if we look at the major index or major stocks, you got Apple having a great day, up 0.6. You got Microsoft having a big day, hitting up to its recent highs here. So Microsoft up 1.86%. Amazon continuing its move. Great MACD and RSI moving higher. Amazon's a great trade right now. Meta having a big day, 3.7% move on Meta, getting overbought, but just breaking out on the MACD to the upside. And this thing's just launching right off of that 21 EMA. Google here also having a good 1% update. NVIDIA up 2.3%. I mean, all of the Magnificent 7 having great days except for Tesla. So when it comes down to Tesla, not doing so well. It is not participating with the market. It continues to be weak here. MACD and RSI continue to fall on the weekly and the daily. Tesla not participating in the market. I think that's something you got to watch, because if Tesla's not going to participate in the market nearing a new all-time high, and Tesla's nowhere near it right now, and Tesla's going the opposite direction, what happens if the market starts to sell off? I think you could see some nasty stuff on Tesla. And if you're in the Tesla, okay, good luck to you there. So you can kiss your net asset value goodbye. All right, let's take a look at our accounts in here, and this is what we want to get to today on this session today. Delta, 296 on our Delta, 0.07%, still very Delta neutral. Love where we are. A little positive Delta, but not too much. Theta, almost identical, didn't really move today. 0.2%. It's still low. We'd love to see it up 3, 4, 0.03, 0.04, or 0.3, 0.4, something in that range. But with low vol, I don't think you can go too wrong with 0.2% delta. Totally fine with that. Another new all-time high. So we are now on day 7 of the year, trading day 7 with the 7th straight new all-time high in the portfolio. Loving how this year is shaping up so far. It's early, lots of stuff can happen, but up, down doesn't really matter. We continue to pile into a new all-time high every single day. 7th consecutive new all-time high in 2024. BP usage 247, which is after our bill is giving us right around 50.68. We are nearly perfect on our BP use at our 50% that we target on our trades. So we are perfectly aligned. This portfolio right now is nearly perfectly set up. New all-time highs, perfect deltas, little light on the theta, perfect BP use, and we're already up again, $9,400 this month. And which is 2.38% in realized gains alone, and the net lick is up 2.9%, up 11 grand in net lick in 7 trading sessions. So loving where we are here. We don't have to go through the breakdowns of trades because they haven't changed in two days. But what I want to focus on today is, all right, when we entered the day, we were slightly less than 50%. Okay, we were at 48%, 45% the last 2 days, which means we had some room here at 45% to put on some trades, and we put on 3 strangles yesterday. But that still only took us up to about 48 and change percent. Right, it's close, but I got, if I got a little bit of BP to play with, I'm going to play with it. So today we took it up a little bit more, and I'm going to show you my thought process of how I'm placing new trades. I'm going to go to kind of a little my strategy sheet here, so I can give you an idea down here of the different strategies, allocations, units, and how I'm really planning every single month here. So this is how I plan it. The same thing exists in my trading plan. So my trading plan's got the exact same info. They, everything matches. So number 1, and these strategies are pretty much in order for me. Okay, number 1, my long-term 112 trades, I allocate 60% of my buying power, not of my 50%. So I'm allocating 60% of my max 50%. Does that make sense? Okay, so technically it's 30% of my net lick. But 60% of my allowed BP, which is 50%, okay, is in ES long-term 112s. That means I have about $122,000 worth of BP to play with. If I'm using a per contract BP per unit, I usually chew up about $6,000 in buying power on one contract, and that contract generates around $1,200-ish or so in credit. Okay, that's my initial average profit or credit that I get. So when I figured these out, okay, how many units a month can I get on? Well, I can get 7 of these units on a month in this trade because I'm taking these trades off in roughly 90 days. Okay, so if I can get I take my buying power, okay, here, or my portfolio allocation divided by my buying power, and then I'm going to figure out exactly if I get out in every 90 days, how many of these things can I put on a month? That's 7, 81 a year. Again, I've been doing this just so I know, again, it's been part of my trading plan for quite a while. And so it tells me what my monthly P&L is. So I know that this is my goal right now. And this thing is live. So it's always using my latest net lick for it. And you can see in my trading plan here, 14,806 is what I do plan. And that was at the beginning of the year at 4,000. So I'm pretty doggone close to what my plan is telling me. So this is how I plan my trades. Anyway, I also look at the return on margin of this trade. So I take my credit divided by my buying power. I have 20%, but these things do take 90 days. So I look at my return on margin per day. Why? Because I want to see which ones are most advantageous. And you're thinking, well, why would you ever do long-term? Why just do 112s on futures when I could put more money into one of these other strategies that has a higher return on margin per day on average, because I don't want to put all my eggs in one basket, frankly. I like to spread the wealth around. I like to be diversified by strategy because I'm not super diversified by underlying. I have a lot of my trades in ES. I have a lot in CL or oil, and I have a lot in gold. Okay, those three futures is where the bulk of my funds are. In fact, if I look at my total BP right now on the platform, it is just a little bit more on ES than anything else right now. Oil was number one. It's now number two, just barely. Gold is number three. And then number four right now is copper, then the NASDAQ. So I don't want to overweight. So I do want to spread out my. I don't like to trade stocks. I hate stocks. I don't trade stocks anywhere. No account that I own or that anyone in my family owns has a single stock in it. Has not for years and years and years. I hate stocks. Okay. I've traded a few. I still won't do it anymore. I dabbled in it the last couple of years with one or twos here, and they still just, I hate them. Anyway, so number one, I have BP available. So number one, can I put on more ES long-term 112 trades, bear traps? Okay. I can put on up to 7 a month. Okay. I'm full. I already have them all on. Okay. So no trades can go into that. Okay. 112 on futures, I allocate 25% of my BP to that. Okay. So 25% of my BP goes into 112s on futures. Okay. 50 grand. Okay. These typically take up about $7,000 in BP per unit. They generate $550 in profit. Okay. It is about an 8% return on margin, which is beautiful in 60 days for these 112 bear trap trades. But which is closer to 15%, in 120 days, which is why I do the long-term 112. This is why back a year or two ago, I really came up with the long-term 112. That's how everybody now is doing 120, is because frankly, you get a higher return on margin per day when you go out to the 120 days. That's really where that came from, is I be more buying power efficient. You can see my buying power is less per contract when I go out to 120 days versus 60. So that's where this is coming from. Anyway, 5 of those. I got more than 5 of these, so I can't put on any more 112s on futures. Strangles, 10% of my buying power. I can use 20 grand. Typically, around 4 grand a unit generates about $600 in profit. Now, the $600 is 50%. Okay. Typically, I get about $1,200 per trade using 4,000 in buying power, but I take profits at 50%, which is why I make 600 for every 400. This is the best return on margin trade you can have. There is no better trade than strangles. Okay? It is the number one trade using futures and the leverage that you get, bar none. It doesn't have as high a win rate as the 112s, which are close to 97% to 100%. If you strangles, it's 89, 90% typically, and that was what I hit last year. But still, I mean, it's pretty good. If you knew you could make 15%, overall on a trade that has a 90% win rate, wouldn't you do lots of those? Anyway, I can go up to 5. I just put 3 more on yesterday. I'm not quite max, but I'm pretty close. So I don't want to put any more strangles on today. I'm not trading my SPY Leap put campaigns right now. And if I did, how does that compare? Well, you can see that those generate about, 5% return on margin, which is pretty good. They come off in about 30 days or so. However, it's really only a 0.11% return on margin a day. So it's the lowest generating one. I think SPY Leaps are fantastic. It might be the best or second best trade you can do in a PM account. So if you're using portfolio margin, okay, I'm going to trade similar things, different underlying. Instead of ES, I might move to SPX or something. But SPY Leap puts, one of the best trades. I'm just not doing them now, but I have done these quite a bit in the past. I've been doing these for several years. All right, and then I have some spec trade money. 5% of my spec trades, 10 grand, I can use. for that. And right now, I don't really have any spec trades on. I have some hedges on, but I don't really have any spec trades on. So I can allocate maybe 2 trades here using about 5,000 in buying power to generate 250. That's my chain. So when I'm doing this, okay, I'm figuring out where can I place a trade. Okay. So I go through my progression. ES 112s? No. I'm full. 112s on futures? I'm full. Strangles on futures? I'm full. Okay. Spec trades. Okay. I'm not quite full. I have some room for some spec trades because my 3 main core strategies, as per my trading plan, 1, 2, and 3, they're full. Okay. So what kind of spec trades? I have a multitude of spec trades according to the trading plan that I can do. I can put some money in 0 DTE on a daily basis, which I sometimes do. I can trade ratio spreads, credit spreads, butterflies, naked puts. Any of those would work. Now, one of our members in Discord asked me today, well, why did you choose the ratio spread, which is what I put on today, and I'm going to show you that in a minute. I'll show you how I really trade ratio spreads. Frankly, if you go through your progression in your trading plan, I'm going to look at my trading plan right now. Spec trades, SPY leap puts. Well, remember we talked about the fact that I'm not doing SPY leap puts right now because I don't love the setup and the buying power on SPY leap puts. Credit spreads. Okay, credit spreads with the market at new all-time highs. I don't like call credit spreads because I don't like to get in front of a moving train. Okay, but I also don't like put credit spreads right now because when you're overbought, I think it's insane to be putting on credit spreads here. We could still go higher, and if we had a pullback, which we did, that was the time to do it. But now we've bounced off to 21. When we came back down, touched the 21, that was the time to put on credit spreads. And if you're following along with my processes every day, when I look at these charts, this is why. Okay, when we came back down here these 2 days on the 4th and 5th, and we hit the 21 and then bounced, that was the time to run credit spreads. On this pullback, you write credit spreads on whatever stocks or indexes that you want. Okay, same thing. I could have done it on the Qs. I could have done it on SPY, ES, whatever. Okay, that time has passed. We've started to rock it up, and now we're seeing some pretty good moves. We could hit new all-time highs. At new all-time highs, put credit spreads, bananas. Naked puts, okay, still a little risky. Now, I'm going to talk about, and butterfly trades, I think this is a good spot for butterfly trades. Butterfly trades are low risk and high reward. I could pick some butterfly trades up here. Really, I target around the 3 ATR or the expected move, either one, with the butterfly trade. And I do short term, like 12 days, according to my plan, 12, 14 days. I have an entire trade plan on butterflies. Butterflies is a really good one. It doesn't use much margin. And if I get any margin relief in the next day or two, I might put some on if this market keeps going. If we hit a new all-time high, I may get into some butterflies. All right. But I decided today to put on a put ratio spread. And yes, it's akin to a naked put to an extent, but it's pretty far out of the money. And I've already got, and I like the tent type of trades. So let's get into how I set up my ratio spreads. All right, so let's jump into the account here, and we're going to trade ES. Again, I only trade futures. So if we're going to trade ES, I typically like 60 DTE-ish for put ratio spreads. So I'm looking around here. I'm not going to go through my exact strategy on ratio spreads and how I manage them, but I'll give you a good idea. I'm probably targeting something down in this 4,300 range. Pretty good open interest down here, 12 grand. It's pretty low. My strangles are usually around the 7 delta, so you can start around 7 delta-ish or so here. But I do have a range. I do have some specific deltas. I'm just giving you a good example here. And I'm gonna start with about 100 wide here. and this is where I'm going to sell the two puts. So it's a 1-2 or a 2-1, whichever you want to call it. It's a 1-2 ratio spread or a 2-1 ratio spread, two puts to one, two shorts to one long put. And really, I'm looking for, when it comes to this stuff, I'm really looking for at least probably 10 to 15% return on buying power. So if you look at the tail here, I'm getting 265 in the tail, and I'm using about $1,809 worth of buying power here. So this is roughly a 14.6. This is a pretty good pick for me right in here. So this would be a pretty good ratio spread trade that you have. The great thing about the ratio spread is down here you have this tent. If we drop, we would have to drop pretty significantly to get inside of this tent. And these things give you a lot of opportunity to adjust. I mean, you can do all kinds of things because it's only two different legs, easy to put on, easy to take off, easy to adjust, and a much flatter T+0 line to start with. So we have a long way to drop, and the longer it takes us to drift down, the more this T+0 line is going to start to move up. So as these things start to trade, you can see that T+0 line starting to lift and lift and lift and lift and lift and lift. So you don't even have to get into, the tent here or the trap here. If you're, depending on how we're moving, we can be down here and we can be making, instead of 265, we start to make 390, 400, 500, 600, 700, 800, $1,000. Okay. We don't have to get in the tent to be making $1,000 at 4,300. And that is over a 10% down move. So if we take a little bit of time and sell off 10% in the next 30 days, this trade is going to look really, really, really good. If not, I will manage it as well. I do have a profit target and stop loss part of my trade plan on these. I size these appropriately, so I know exactly what size I want to put on. So I'm not going to just put one contract on. I know how much I have. If you remember the trade plan that I talked to you about, remember I was able to allocate about $3,000 or about $5,000 for one of these spec trades. Well, there's a $5,000 buying power by doing 3 contracts. I can take in $795 on this particular trade if it stays up there. So I can go on, put this on, and take that out. So you get a good sense of how I'm trading these. I like to put ratio spreads. I think they're a good trade option. They're really kind of the core of the bear trap trade. It's not exactly how the bear trap came along, but the only difference in a 1-1-2 bear trap and this is you got an extra 1 short put in between here, which makes the trap bigger, but it also makes this T+0 line a lot steeper. Okay, so it's a much steeper T+0 line that you have with a 1-1-2 trade, the bear trap trade. I like the ability to adjust these. So anyway, this is kind of one of the core oldies but goodie trades that we have. It's in the spec trades categories on the trade plan. And this is what we're doing, something akin to this today, and then we manage this trade. All right, I hope this was helpful to you. You guys got something out of this. You can see a little bit of my thought process of exactly how I go about figuring out what trades I can put on. So what trades can I put on? When can I put them on? How do I size those trades? And I have a progression, okay, that first I'm starting with one of these. Nope, I'm full. Do I have enough of these? No, add them. Do I have enough of these? Add them. As long as the buying power dictates your trade plan. Even though we're targeting 0.4% on theta, doesn't mean theta is dictating our moves, okay? Theta is dictating that we should try to get more on, okay? But I'm not going to trade just because theta says it. You got to check with Mrs. Buying Power, and if Mrs. Buying Power says no, it's a no. Okay? So if Mrs. Buying Power is telling you you can't go shopping today, you can't buy, then no, it means no. All right. I hope this was helpful to you guys. I hope you get a sense of how my trade plan is constructed, how I size, how I structured the different pieces here. You can come up with your own. You figure out your own strategies. Maybe you want to do more long-term 112 bear trap trades. Maybe you want to do less. Maybe you want to do standard 112s on futures. I'm doing oil. I'm doing gold. I'm doing copper. I'm doing bonds. I'm doing ES. I don't really care. It's an equal opportunity trade. I've got strangles on those same underlyings, but I have a certain percentage there. And I'm making sure that I stick to my percentages and I know exactly how to trade every single day. If you like this video, click that like button. Please help me out. Let's get some more people involved in trading, helping change their lives, helping change their families' lives. We're changing lives daily here. I'm seeing all kinds of great stuff. We've got some great new contributors in the channel now. So you're getting a lot of different trade helps. It's become a true mastermind of really, really great traders. Every day there's a new great idea or something that we're trying out. If you're in a room and you're the smartest person in the room, you're in the wrong room. And if you're not in a trade room at all, you got to get into one. You have to trade with other people. It's the only way to hold yourself accountable. Trading's a lonely business. We need other people to hold us accountable and to keep us motivated and moving. And I love to see success stories every single day. Our success story right now is 7 straight days of all-time highs to start off 2024. Could all go to hell in a handbasket tomorrow, but so far we are moving on, and our plan is almost nearly perfect with our setup. So there's where we are. I hope you guys have a great rest of your evening. We're going to see you in trading tomorrow. And if you have any questions, you can certainly pop in the chat down below. I'll do my best. I can't answer every question. Discord keeps me pretty busy. And if you want to see what we're doing in the Discord, come and join us instead of just grabbing the free stuff daily. Get into the nuts and bolts and figure out exactly how to trade and trade with other people that can keep you motivated. Okay, invest in yourself some way. I don't care how you do it. Our group, another group, whatever. There's some great people out there. There's some not so great people out there promising you 10% a day in a month and stuff like that. We're just looking for 3%. We're just looking for our piece of the pie. All right. Have a great rest of your evening, folks. Take care. Bye-bye.